Ladies and gentlemen, welcome to the Sledgehammers in the Office podcast, where we celebrate the heavy hitters on the job site and in the office. Today, I'm joined, as usual, by MasonOxendale. How are you doing, sir?
Doing good. Just checking the updates for the national championship while we do this. That's on tonight.
That's funny.
Yeah. And then tonight, we are super excited to have our first guest of 2024, Heidi Ferraro. How are you doing this evening?
I'm doing wonderful. Thanks for having me.
Is there any way you can add like applause, a fake applause when you say that?
Probably, but that's going to be like not something I want to jump into and learn for editing right now.
Here, I'll just
Yeah, there you go.
get that.
Yeah. We start with our guests. What is your previous work experience? What are you doing currently? And then if you could give us even just some details on a little bit more about what you're doing, but also the team that you're working with.
So I am a mortgage lender. I'm with Fairway Independent Mortgage, and I've been doing this for 37 years. I got into this, when I was in my early 20s, and I wasn't doing lending part of it. I started out just as a receptionist and did a loan closing, shipping, kind of worked my way up. It's been a great career. I love what I do. I love helping people.
Awesome. And then how many people are part of the team that you're working with currently?
My team right now, I have 4 people.
Okay.
They're part of my team.
And then how did you pick up the people along the way?
I picked up the people along the way just based on my need as a loan officer. So every loan officer works with a processor. The processor is the person that once we get everything in, they put everything together to get the loan submitted to underwriting. So everybody has a processor. And then some loan officers, depending on their volume, they get loan assistance, LOAs, loan officer assistants. So I have actually 2 loan officer assistants. One of them I've known forever, Renee. Gosh, I've known her for 25 years, I think, something like that. She actually was, Renee was a real estate agent out at a new build construction place, and she was a real estate agent. So I went to get her business, and then we became friends. So we've been friends ever since. So.
And then you flipped her.
Yeah. And then she came and she goes, "Can I help you?" This was probably 8 years ago. "Do you want me to come in and help you?" Yes, and she's still here. But she just kind of does things like she helps me with thank yous and LSUs and things like that that I do. And then I have Megan, who is a loan officer assistant. She helps gather information from the clients, disclose files, because there's a lot. People don't realize how much goes into purchasing a home and all the information that we need for a loan. So
Yeah.
you know.
How many people are normally like on a team?
I would say about 4 to
That's
5.
normal
That's
size.
pretty normal.
Yeah.
Yeah. Now there's some teams that have multiple loan officers.
Oh.
So
okay.
I'm just me, but there's some teams in our office that, there's 6, 7, 8 guys, gals on a team that are loan officers.
Gotcha.
Not loan officer assistants, they're actually loan officers.
Yeah.
So,
Kind of like our team here.
exactly.
It's like one person starts it and then hires a bunch of other people.
Right, yeah.
Oh, nice. I never knew that.
No, so I'm just me, my small little team.
Has it always just been you?
It
Always.
has.
Oh, wow.
Yeah. Well, when I was doing builder business back before the market crashed in 2008, I had 3 or 4 other loan officers that were on a bigger team.
Okay.
But when I don't do a lot of builder business anymore, but
No.
just resell, refinances.
Gotcha. And then you mentioned that there's a lot of documents that go into getting an application prepped for the mortgage that is going to get funded. One of the things we were talking about beforehand today was a lot of people get intimidated if they're like, we're thinking about moving, we're thinking about buying a house, but the idea of talking to a lender seems like we're talking about finances, what are they going to ask for, do we even qualify? And it's like there are quite a few documents that are involved,
Right.
but one of the things we want to talk to you about is like, could you even just walk through with us, what are the documents you guys need to get everything funded appropriately, and then what are things that people could even just like have a checklist for themselves to say, hey, nope, you are a perfect candidate to come in and talk to us.
Right. So that's a really good that you bring that up because I just had that conversation this week. People are, for some reason, they feel very intimidated by the process. They feel like if they do it, the minute they do it, that they're like somehow they're stuck and they have to do it.
Yeah.
Right. It's so easy as far as what I usually do is I start with the loan application, which is online, and people can do it at their leisure because they can start and stop it. They go onto my website, fill it out, and that part is actually pretty simple. And the other thing that's kind of interesting about it is that sometimes people stop. They're afraid to put something in it because they think they're going to get it wrong, like it's a test, and it's not. It's really just a gathering their information so that then I look at it and I go in and make changes. I look at something and go, well, that doesn't sound right, or I talk to them about their whole scenario and go through it. The other thing too is that, a lot of times I'll offer just doing a soft pull versus a hard pull on their credit, and we'll talk about that later because I do want to talk about credit. But for the most part, they do the application. What we want to see up front is we want to see pay stubs, or if they're self-employed, tax returns, W-2s, where's their money coming from. They don't have it now, that's not a big deal. We can come up with a game plan. We can look at grant programs that help with down payment assistance. There's so many different things that we can look at. I have clients I talk to all the time that I'm just giving them a game plan of, here's what it's going to look like when you buy 6 months, 9 months, a year down the road, right?
Yeah.
And those are the people that they appreciate it. They appreciate the free advice. They appreciate help with their credit, setting them on a path to have maybe a better credit score.
Yeah.
So,
When somebody, like if somebody's just like, hey, I'm ready to buy a house, like they're like, I'm going to talk to a lender, like they're afraid to talk to them. They're like, well, what do I need so I know all the answers? Like they just need to know, they need to have their W-2s, maybe their tax returns from whatever the previous year was.
Yeah, and a lot of times we don't need tax returns. If they're a W-2 employee, we don't need their tax returns. But it's really simple because once they fill out that application, all the questions are on there, right? And if they're not 100% sure, I just say just mark whatever, and then we'll go through it together. So don't feel bad about don't feel like this is a test and you're if you don't pass it, you're not going to get a loan, right? So
I think because one of the questions isn't on the application. It's like credit card. How much credit cards do you have, right?
No, that doesn't really ask.
Not how many, but like, does it ask you like
How many
much
debts do you have?
Debts do you have? Or does it ask for an estimated number at all?
I don't think so because it knows that we pull credit.
Okay, and that's on the credit report.
It's on the credit report.
Yeah.
I thought that was on there. I thought I filled that out recently.
That it said how much debt
An estimated amount of debts or something like that. Right? I don't know if I'm getting confused with the income part of it, but I could be wrong.
Because I think people get flustered about that. Like, I got this and this, so it's like, well, because you can you see all that's too with the soft pull as far as like how much credit they have and where it is.
Absolutely.
With soft pulls. Yeah. So a lot of people, the last person I talked to, they're like, well, I don't have I don't have everything that I need. I don't know all this stuff. I'm like.
Yeah,
you just say how much tell her how much you owe or how much you make, and then when she does a full pull or a soft pull, she'll find out how much debt that you have, and it'll actually be beneficial for you, so you'll know, and you can work on it if it's a lot. Yeah.
I think the best way to get the word out is we're not intimidating. We're not, we're actually there to help. They don't have to have all the answers now. It's just a starting point of, hey, let's get started. Once you push that button, that does not mean you have to go buy a house.
Yes.
Right?
Yeah. And you're not a car salesman. You're not going to convince them to buy one.
And there's not a time thing on it.
Yeah.
And that's one of the things I think that kind of sets me apart a little bit is that I don't treat people like, come on, what's going on?
Oh yeah.
Where's your stuff? Why, like I'll send a friendly, hey, do you mind just checking in? And you know, what you doing, you know.
Yeah. Well, yeah,
But-
your experience, people who are little that get you stuff on time, those are the deals that work out. Where if you have to hassle somebody 4 times a week, they usually don't ever pan out for the most part.
I wouldn't say that.
No, you wouldn't?
No, I actually wouldn't say that because
wow.
I think a lot of people just get busy with their lives. Mm-hmm. I
think we probably see it on our side where if someone's not getting back to us, then we usually know something's not going well here.
Yeah. So I'm at a point where I kind of know which ones seem more serious than other ones, right? I mean, I can just by my experience of talking to so many people. I think the ones that are more serious, they definitely do get me their stuff right away. But there are people that are very serious that just, you know, they've got life going on, right?
Yeah.
So I don't know. I would say that it's the people that don't communicate at all. Those are typically the ones. But if they're communicating, at least they're, you know.
How serious did you think I was when I was filling out the application?
Really serious. Really serious.
Pre-qualified to under contract in 5 days.
Yeah, that's right. That's right. You're a good one. You're the ones we like.
I get an email 5 minutes
Kudos.
later. There you go.
Kudos.
Didn't you fill it out like at the gym?
Yep. Yeah. My wife was getting mad at me. She's like, "Are you even going to do anything?" I'm like, "I'm working on something."
Yeah. Well, see, that's what I mean. Look how easy it was. You fill it out at a gym,
Yeah.
right? I have people that think you can fill it out on your phone, you know,
That's what I tell
at
people.
your
Yeah,
leisure.
fill it out. She'll call you if she needs anything.
Yeah.
Yeah.
The other thing that's really cool about our app that we have, because we have an app that people can actually sign up for the app. It's free. But if someone gets really stuck, I can actually go online and mirror what they're doing. And so I can literally go in and go, you know, press a few buttons.
Or like talk to them on the phone and be like, oh,
Oh,
nice.
that's
they're
pretty
not-
cool.
Yeah.
So it's very user friendly.
Yeah.
So
I want to switch gears a little bit because this has kind of been a personal curiosity of mine where the interest rate jumped significantly starting in 2022. And I've heard the term the Fed rate, and then we have the interest rate that people are paying for their mortgage. So my curiosity is more like, all right, what's the difference between the two of them? How are they correlated, if they are? And then what is the relationship between the two of those?
okay, so the Fed rate is the bank rate. That's basically the rate that banks use to borrow money. Okay.
So if
It's
like
not-
JP Morgan Chase is borrowing money from the government or from like a different bank?
From a bank.
Okay.
It's like bank to bank. Government. I don't know if the government borrows money from banks, but it's basically when you go get a loan from, let's say, a car loan or anything like that. It's basically the bank rate. It's what what the Federal Reserve is
Says they
setting
can
as
char-
setting as the rate. So you know how like when you guys if you had savings and you know your interest rates have been really, really low, but guess what? Now people are making more money on their savings accounts,
Yeah.
right? Because that rate's gone up, right? So it's basically apples and oranges. They are two separate rates.
Okay.
But they do correlate a little bit together. I mean, when we see that happening, usually then something happens with the mortgage rates. But, you know, there's times where I see the feds increase the bank rate, you know, 2, 3, 4 times, and the mortgage rates don't do anything. So it's just, so they really are apples and oranges, honestly, right?
So if I were to understand it correctly, we've got the Fed rate, which is where the banks can be borrowing from each other for certain loans, but the mortgage interest rate is going to be basically the end consumer with the bank that they're dealing with. So the bank can adjust the mortgage rate dependent upon possibly the expenses that they have to cover or the earnings that they're trying to make for the year.
Not necessarily, because I think the interest rates, mortgage rates, okay, are, most mortgage rates are, they basically are based on what's happening in our economy,
Okay.
right? Unemployment, employment, those are the things that, a lot of those things are what drives interest rates. Okay. So not the bank rate, but mortgage rates. So we're always looking at mortgage-backed securities and who's buying bonds and who's not buying bonds. So every day we're looking at the bond market to see what the bond market's doing. And that kind of determines what's going to happen with the mortgage rates.
Yeah.
So we were in a really good time, right before, the rates jumped up. We were doing a ton of refinances. Then they start obviously going up,
Yeah.
pushing 8% at some point. Thank goodness right now they're kind of in the 6s. There's some VA loans that are in the 5s. So, it's kind of in the 6% range right now for FHA conventional. VA is a little bit better, which I think is great. But, I've been doing this for 37 years. When I bought my first house, my interest rate was 9.5. So, a lot of times people, they look at the interest rate as something that's going to be fixed forever, and it just isn't. I mean, when I had 9.5, then I refinanced, and then I refinanced again, and so there's always, in my history, there's always been an opportunity to refinance. When rates are high, they come down. I bet you in the next year and a half, we're going to have another refi boom. People are going to come back and start refinancing. The key, though, is that people need to not just jump the gun immediately, because there were people back in 2020, 21, 22 that were refinancing 3 and 4 times.
I think I texted you a couple of weeks ago when the rates dropped.
Yeah.
It was like barely a 0.5%. And I was like, Heidi, should I do it? I'll do it a bunch of times.
Yeah.
I don't care.
I mean,
she's like, no.
there is still cost associated with a refinance. I mean, it could be anywhere from, probably $1,000 to $2,000, and you're doing that, a lot of times versus just kind of just sitting back a moment and just waiting to see what happens.
Gotcha.
Refinancing, when you refinance, you're essentially just getting a new loan on the house.
You
so it's
are.
not like if you're 5 years into a 30-year, you don't refinance for a 25-year loan.
You can.
You can? Okay, that's what I'm
Yeah, absolutely.
Okay.
Well, a lot of people don't know that you can pick your own term on a loan.
Okay.
You don't have to do a 30-year. You could do 27 years or 20, 23 years.
I did not know that.
Yeah, you can pick your own term. A lot of people don't know that.
No, I had no idea.
Yeah.
You could
You don't get a price break in the rate until you're at a 15.
Yeah.
So most of the terms we look at are 30, 25, 20, 15, 10. But you can pick anything in between, but you don't get really a good break in the rate until you're at on a 15.
Yeah.
So then you get probably about 3/8 to a half better in rate if you go a 15-year term or less. So another misconception about mortgage loans is down payment. I cannot tell you how many people still think you have to put 20% down. And I'm not, I know, isn't that crazy?
Yeah.
But I hear them talk about it on the news, and they'll say, oh, they have these new programs out where you don't have to put 20% down anymore. And I'm like, you've never had to put 20% down. What are you talking about? Where are you getting your information? You can put 3% down on a conventional loan, 3.5% FHA, VA 0 down, USDA 0 down. So, but for the most part, conventional loans, you've always been able to at least put 5% down. There was a very short time, I think, where they required 10%, but that was a few months. But I think it's always been 5. But the 3% is the one on a conventional loan that's kind of come and gone.
Yeah.
But we've had it now for quite a while. So
Something I wanted to ask you about was kind of the boom that we saw between 2020 and then mid 2022. So there's some people that I follow on YouTube where they like to talk about, I have lender friends where they were going gangbusters with business. They'd have 50 files open at a time, just rolling through them. And now once the interest rates went up, nothing. There's mortgage lenders going out of business all over, like, and it's just this whole tirade they go on over and over about that. So I wanted to ask, as far as like what were the numbers in terms of for you guys, and it's what kind of percentages did you see in terms of the increase through 2020 to 2022, and then how much did that drop off? I'd say in terms of the refis, and then also the new mortgage applications just for someone looking to buy a house.
Right. So obviously the boom was just crazy. I mean, loans were falling out of the sky, right? So, and it was great. I had a great year. I think 2020 was probably my best year I've had in my whole career, and I even had very large builder accounts.
Yeah.
So here I thought the COVID hit. I'm just going to be sitting at home, not doing anything, and I was literally at my kitchen table, doing refis left and right, which was great because I had a lot of referrals, my old clients. But so refis, the minute the rates went up, the refis there was zero.
Mm-hmm.
I mean, it went from a few here and there to zero.
Yeah.
Okay, now I'm starting to see a little comeback. People are pulling equity out of their homes to be able to purchase other homes because they want to keep their house as a rental property, or they want to buy an investment property. So they're pulling money out. A lot of people are doing home equity lines to pull that money out because they have such low rates on the loans they have, right? So they're like, well, we don't want to redo the whole thing. We just want a home equity line to be able to pull the money out needed. But it came to a pretty good standstill. I think.
Do you mind sharing some of the numbers that you guys were doing in terms of the refis, or
I only know.
Is it a percentage difference?
Yeah, you mean percentage-wise? I mean, it probably went from 100% to 5%. I mean, overall, that was nationwide, I'm sure. I've been staying very, very busy and steady still through all of it, and it's interesting. There's not very many of us that are still in the business that have been around for so long, but we've been around for so long that the guys that were just getting into it, that got in at 2020. Yeah, but not real estate, but mortgage people specifically. They're struggling. I mean, it's really hard for them out there because they don't have the relationships built up. I would say that, having the relationships, working hard. I mean, I work harder now than I have in a long time for less business, if that makes sense. But it's because I'm out, going to meetings and like doing what we're doing right here, and I've taking real estate agents to lunch, and
you'll be at our meeting on Wednesday.
On Wednesday, yes, I'll be at your meeting Wednesday. Yeah. But just kind of like out and about, and so I go out there, and people, of course, appreciate how long I've been in the business for number one, but number two, hey, my loan officer's not doing it anymore. They had to go pick up a second job. But for the people like me that have been in the business for so long, we planned for this type of crisis. I knew something like this was coming.
Because it's happened
happened already. I've already lived through 5 of these. I think of 5 since 1991.
Okay.
So this isn't unusual.
Right.
This is a little, I will say that though, this is a little bit different just in the fact that, rates were high, but then inventory was low and house prices were high. So what was everybody thinking, that the market was going to crash like in 08?
Yeah, exactly.
And that did not happen. So, which I'm glad it didn't, I think. I don't know. I'm on the fence on that because you know what? Honestly, what makes me sad is that first-time home buyers, it's hard for them to find homes at good prices. I'm like, well, maybe if we had a little bit of a crash, some of these people that need to get into these, that only qualify for a home that's 200 or, 300,000, they could get a nice little house.
Yeah.
Then the prices could go back up.
Yeah,
You know what I mean?
Yep.
Right? And you know what? You know what's really interesting is that when the market crashed in '08, and the people, this is a fact. If you could, guys can look it up. The people that bought homes after the market crashed, and then there's people that walked away from their homes when the market crashed. If they had kept those houses, they would be probably up by $100,000 in those homes that they were upside down on. So they were upset because they were upside down. They were like, "Oh, I'm upside down on this house. I'm just going to walk away from it." Right?
Yeah.
A lot of people did that. Some people had to. Some people just did it because they were upside down.
Yeah, I'd
Right?
say I wasn't even in real estate, and there was a couple of people that I worked with, and they were like, "Oh yeah, we had to walk away." I was like, "Oh yeah," I was like, "Couldn't afford it." They were like, our house was upside down, so we walked away.
Right. So if they had
Why
kept,
couldn't you just
Right.
keep paying the mortgage?
if they had kept that house,
Yeah.
not only would they still have a low mortgage, but they would be way, they would not be upside down anymore.
Mm-hmm.
They would, and I only know this because I owned some rental properties and they were upside down. And I'm like, well, I'm not going to walk away
Yeah.
from them. I can make the
Yeah,
payment.
and at the time they were like, "Oh yeah, well, we had a $350,000 loan." And where they live now, that house is probably going for almost $6.
Yeah. Right.
Like, dude, you
Yeah.
messed up.
Yeah.
So
Yeah.
that's just crazy. Yeah.
So I think that people just don't get they don't understand the whole facts and, how interest works and,
Mm-hmm.
how matter of fact, I had clients back when the market crashed, they're like, "Oh, I don't know if we want to buy now because, what if it crashes more?" And I'm like, "Listen," I go, you can buy a house right now for $55 a square foot.
Mm-hmm.
The builders aren't in business anymore because they can't build a house. They have to build a house right now is $101 a square foot.
Mm-hmm.
Like, why would you not buy? So those people that did buy, I mean, especially the ones that came back and I did multiple loans for them,
Mm-hmm.
they were like, "Oh my gosh, I'm so glad that we bought that house. We were so nervous about buying it,
Mm-hmm.
and look at how much equity we made." So I honestly, I think people need to have someone experienced that they talk to. But problem is that they listen to their friends. They listen to
YouTube, yeah.
yeah. They listen to things that people that aren't experts in the field.
Mm-hmm.
So they just kind of hear something and they.
Right.
I had someone today ask me a question that was like, "Where did you hear that at?" Something about paying. Are they going to lose money if they put more money down on the house they're buying?
Mm-hmm.
And I'm like,
No, it's all. I mean, that's
well,
just
I'm not sure what you mean. What
Yeah.
are you trying to ask me?
That's a problem with the world today, though. I mean, you can go down the rabbit hole. Is that like people have these beams out, and it's just like one sentence, and then people who are scrolling, they read it about the market's crashing. Then they
Right.
scroll, and then now when they talk, they're like, "Oh, the market's gonna crash."
Yeah.
But like they don't read into it. It's just people have those clickbait stuff.
Yeah.
Right.
It's very annoying.
The person I was kind of referencing before it's a gentleman, Patrick Bet-David, and he's got a very sizable net worth, but he exited an insurance company and started doing an entertainment company, and they kind of have a show, and they've got some very interesting guests that they have on there, stuff like that, but then they start talking about real estate and all these things, and at first I was like, maybe seems like they're making good points, they've got certain stats for things, and it's like, now that we're a year later though, it's like, nothing that you predicted that was going to happen happened. And he's
Right.
the guy who's talking about the lenders were going gangbusters, now they're not, like all these people are out of business. It's like, that's kind of how the economics of this works. It seems like it's
Right.
not that we're saying it's good. We never want to see someone lose their job necessarily, but at the
Right,
same
yeah.
time, it's like if you said you've seen this 5 times starting in 91, my question then becomes, okay, if you're like, I would love to know, what did you do in 2020 going, okay, this isn't going to last forever, to set up for where we went in 2023, and then how did you do that back in 91 to make it through?
Well, I'll start in 91 because I wasn't a loan officer in 91. I worked for a mortgage company, but was not an actual loan officer yet. But what I did to keep my job is I learned how to do different jobs. So I could help out as a receptionist, and I didn't say no to any job they wanted me to do, right? I'll be the receptionist. I was typing up deeds for a construction company that we had. Then I did shipping, and I helped shipping at the end of the month, and then they started training me in closing. So I did everything that there was, to do. So when it came time for layoffs, well, I got paid half of what a closer did in their department. Plus, I did everything else.
Yeah.
So, who did they keep? They kept me, right?
Yeah.
So that kind of was like in the beginning, right? But this most recent one, what I did was basically, a lot of it has to do with saving and budgeting correctly and paying things off, and I knew that this was going to come. Like, I just knew it. It's just, it can't go on forever.
Yeah.
Right? I absolutely knew that something was going to give and it was going to come. So a lot of loan officers, when they get in the business, they look at it like, oh, look at all this money coming in. But then what are they doing? They're out spending, and they have to have the nicest house and the nicest car and the nicest this, and make sure that they're living up to their other, the Joneses, I guess. But anyway, I think the people that have been in it as long as I have, we know what to do. We know how to budget for it.
Exactly.
Do you have to budget inside the company, or is that more of like a personal budget?
It's a personal budget.
Okay.
Yeah.
Do you then, the people that work with you, are they W-2 or are they 1099, or is everyone employed through Fairway? How does that work?
Everybody's employed through Fairway. We're all W-2.
Okay.
Although I do believe that they do have 1099 loan officers. Down the road, someday when I ever retire, I'll probably be like a 1099 loan officer.
Okay.
Versus being W-2.
Yeah.
So
then, do you guys make money for the team based on the amount of loans that you close, or how does that work?
yeah, the amount of volume that we
Okay.
do. Yeah, we're every loan officer, and I'm pretty sure in the entire country, we all get paid a percentage of the loan.
Okay.
And that could vary anywhere from 0.5% to, I guess, maybe 2.5%. And a lot of that has to do with the interest rates. And, so if you're a loan officer and you want to get paid more, then you're probably going to have a higher interest rate. And so even though that's not really supposed to be the way it is, because back in, I think it was 2011 when the Fed came out and basically said, hey, loan officers, we're going to pay you. This is how you get paid now, right? And everybody was upset. Everybody. There have been so many times where, in our business, where those types of changes have been made, and people just go crazy. And now you look back and go, you just adjust.
Yeah.
Yeah, you just kind of mold, you adjust to it, just like everything in life, right?
Do you guys get bonuses?
No, we don't get bonuses.
So it's essentially almost sales, where it's just a lot of commission.
100% commission.
Yeah.
Okay.
Yep, 100% commission. I mean, like the processors and some of the internal people that work for a mortgage company, like the underwriters, the closers, the processors, they are not commissioned. They're all salaried. So, but they get paid through money that comes in from the loans that we bring in the door. Right?
That makes sense.
Yeah. So.
Do you have a seasoned team? You've been together for a while, but was there even the conversation when, like, you would bring someone on, however long ago that was, but depending on the person, to say, hey, these things go through cycles, so what you're making one year is not what you're going to be making the next year, and what might be at a low is not going to, you're not going to stay there forever. I know that for the real estate team that we're a part of, they have he has a financial course that he has all of us go through. Like, is that something that you talk to your team members about to say, hey, I want to make sure everyone's on a stable footing? Has everyone just been through enough of it to know, like, hey, we have our houses in order?
Yeah,
we're okay?
everybody's been through enough of it usually to know. Surprisingly, though, there are a few that they just, I don't know what they think or why they think that, like they sit there and go, well, I'm working hard, I should still be getting paid when no business is coming in the door, right?
Yeah.
So, there are a few that don't get it. And then those are the ones that have to go get other jobs because
somewhere else.
they didn't realize.
Grass is
like
greener on the
how
other
did
side.
how did they not realize that this was going to come? Because this happens, all the time. I mean, it's just it.
Especially if you get paid off commissions.
Yeah, and you can go through. There's charts out there where you can go and track all of this. You can actually see, like, when the rates are low, and then, what's kind of interesting with interest rates is that when we're in a recession or coming near a recession, interest rates are typically lower. And when we're not, interest rates are higher, right? So go through and pull up, you can pull up a, Google, and you
And
can
see
actually
the
see recession, up, down, up, down, and then you can see, and then you can see where the interest
Rates
rates
to go.
are
Now,
with the
what about
time.
election years? Have you noticed a trend?
This is
Personally?
Mason's thing.
Yeah.
I'm always just curious because everybody talks about it, but I want to ask people who
Honestly,
been in it.
Yeah, I've been in it. I've been in enough of them to know that most of the time rates are down in an election year.
Yeah.
Yeah. Because, honestly, why? Because the person that's running wants to wants it to look good, So they, which is weird because the president of the United States does not have any say or pull in where rates go.
Yeah.
Right? But there are things out there that spark the investors, and based on things they're hearing. Because believe it or not, people speak in like the Federal Reserve, and interest rates go up, or they speak and they go down, and all they're doing is speaking. It's not, something's not happening. It's just that person talking.
Yeah.
And I'm like, how is that, right?
Yeah.
So, I think there's a lot that we don't know. I'm not like a conspiracy theorist or anything.
You said the C word. We're getting
Right.
yeah.
But you know what I mean? Like,
Oh yeah, there's a method to the madness. I feel like sometimes.
I'd love to know like how it is someone could just say something, and rates go up or down. Like, how can you just what kind of pull do you have that you could just say that?
Have you ever tried it? Just
No.
woke up one morning and just
It's just live stream.
live
Yeah.
stream, just be like, hey, rates are going down.
I have not done that. Maybe I should try it. Although I don't think it would go very
Yeah,
far.
exactly,
But
yeah.
nobody would listen to me.
What's the difference between what you guys do at Fairway compared to what we'd see from like a JP Morgan Chase, a Wells Fargo, a Citibank? If someone wants to go in, like you can go get a mortgage through any of those institutions. There's Fairway and then other companies as well who are not your commercial banks who have the brick and mortars out there. But what do you point to as the big differentiators, and then advantages, disadvantages to either one?
So there's different. So you have. I'm going to kind of split it up a little bit more though, because you have mortgage bankers.
Okay.
Which that's what Fairway is. Okay. Then you have the banks, and then you have brokers.
Okay.
Okay, so mortgage brokers. Mortgage brokers are people that typically work out of their home. Some of them have offices, and they basically work with different mortgage investors. So they do not themselves process, close, underwrite the loans. Okay. They farm it to someone that does that. Okay. So they don't have a lot of overhead, right? So because they don't have a lot of overhead, typically they have a little bit better interest rates. And there are some really good brokers out there that do a great job, I'm sure. But they also do kind of lose control of the file because
That's
they're
what I've
not
heard.
they're not doing the processing. You know?
Yeah.
Yep.
But I'm sure there's some that have been around for a while that probably have teams at these places that they've built up good rapport with, right? So not to say complete negative about brokers, but and then you've got more the banks where they have the loan officer that sits in there that works 9 to 5, and they probably get paid a small commission plus some sort of a salary. So they typically just are order takers. You know, they get the information and then they ship it off, and then just hope that it sticks against the wall, right? So, and I think that that's the reason why a lot of real estate agents are like, they look at the pre-quals and go, ooh, Wells Fargo, Chase, you know.
Yeah.
And I hate to bash them because, you know, I'm sure there's really good loan officers out there. I've talked to a few of them that I think are good loan officers that work for banks. But overall, I think that they don't get the kind of attention that maybe that they're looking for. Unless they have a lot of money in their bank with them, then they might get a little bit more retention, right?
Yeah.
So Fairway being a mortgage banker, we handle everything from start to finish. So we can look at the loan, we process it, we underwrite it, we close it. Everybody's internal. I can pick up the phone. I've got questions answered in minutes.
Yeah.
We have this amazing department called branch support, and if I've got one thing, and I don't have to sit there and go, oh my God, how do I do this? Why is this not working? Why is this not working? Branch support. Hey, I can't get this to work. Just like that.
Get it done.
They respond, and I'm like, oh, okay, or you know, like, but it's just that type of speed to response when you're trying to get somebody approved and there's multiple contracts.
Especially
trying to get,
you're in the nitty gritty and time's a factor.
yeah.
Yeah.
And the other thing that we'll do too is we'll approve the borrower completely up front. So they're ready to go. They just need a contract. So when a real estate agent's out there, hey, I've got a client, and they're like, well, how strong is their pre-qual? They're already approved.
Yeah.
Like they're fully approved. They've
Yeah.
been through underwriting.
Yeah.
So that's huge. So that's kind of the differences.
Yeah.
And there's any
But-
like there's no like I mean you did mention that brokers do sometimes have a little bit better rates.
Right.
But as far as like do like, you know, Chase Bank or something, do they set their rates and they can't really those people who sit there at the desk, they have no sway.
They don't, yeah.
Okay.
Because the banks will post their rates online, and then when you go, you can actually go online, and I kind of go in there and look and see, well, where's my rate compared to them, you know? So I'm right there, or sometimes better, but kind of right in there with the big banks.
Yeah,
and
some-
they
yeah.
typically have good rates.
Yeah.
So
From my experience too with I've had one good experience and several bad with the banks. But it seems like the people who work at the banks, they only know what the banks are advertising.
correct.
You know, whereas like they call you, they're like, oh, well, we might want to do this. We're like, talk to Heidi, because she'll look at you and she'll go through the list of 1,000 different ways that you can get your how much you need down, if
Yeah.
you need down payment assistance.
The banks are good with the cream of the crop, the easy peasy,
Yeah, the cookie cutter.
the cookie cutter.
Yeah.
And if it goes outside of that, then that's where they kind of fall off the rails.
Yeah, and I don't get too many cookie cutter
Because, you know, I just went through this today about someone about income. And income can be complicated. And so a lot of times you'll get issues with like some of the banks where the loan officer got the information and finally got to underwriting, and the underwriter looks at it and goes, oh, you know, we can't really use this income because, you know. So those are the kinds of things that I'm looking for up front.
Yeah.
So I've been working on one right now, and they're just like, well, we don't understand. Like, he gets 40 hours a week. And I'm like, but he's not worked 40 hours a week since he started in September, you know? So what am I missing here?
Yeah, and that's one of the benefits where if you do get fully underwritten with the pre-qual,
Exactly.
like they've already gone through that process. So once
Right.
you get a house under contract, you don't have to worry about any of the paperwork stuff.
No.
You just got to make sure the house works for you, and then
Yep.
yeah.
So I love it. It's the problem, the only hard part about it is getting the borrowers to send us everything we need to get that done, which you think that they would, like you think that they would want to just be fully approved and get it done.
Yeah.
But a lot of people just kind of like, just tell me what I need to do to get by, right?
You get that letter so I
yeah.
can go look at homes.
Yeah. So I'm like, okay. But,
No. How did you go about customer acquisition? I know you mentioned earlier that when you're in the game for long enough, usually it's people you've built a lot of relationships over time. But how did you begin that process and just start assembling the people that you were going to have as consistent clients?
When I first started in the mortgage or as a loan officer, okay, I was really fortunate because I had a lot of mentors that pushed me along and helped me, which was really amazing. They saw something in me. They thought, oh, you'd be a good loan officer, just probably because of I'm very anal organized, I'm detailed,
Yeah.
So they're like, you need to be a loan officer. I'm like, all right, I'll be a loan officer. So, but in the beginning, I started out with, believe it or not, this is 25 years ago, Fulton Homes was one of my accounts that I did, a long time ago. And of course, the market crashed and I had to go reinvent myself. And so what I did was I went out and started connecting with the real estate agents that I met at the builders' offices, and I had rapport with them. Then they introduced me to their broker office, and then I could go in and do lunch and learns. So I was doing a lot of training, and I did it all over town because I've always lived in the West Valley, but there was a long time where I actually drove to the East Valley and worked. So I went to, I can't tell you how many offices that I went into, and took pastries and it's in this business you have to figure out a way to spend money to make money, and that's how it is with any business, right? And people say that, but I'm telling you that it's truth.
Yeah.
You have to bring a value of something. So back when the market crashed in 2008, all my stuff was builder accounts. That's all I had. And I'm like, oh my God, what the heck, what am I going to do?
Yeah, I do have how do you get a builder account? So when you go to the builder, they always have usually about 2 of them. Like, do you work the agents there?
I did, yeah, initially, and then got referrals from sales managers to go to other builder accounts.
Okay.
But a lot of it was referral based, and a lot of builders didn't have their own mortgage companies. A lot of the builders have their own mortgage companies. So D.R. Horton Homes was one of my builders as well, and they got their own mortgage company. They asked me if I would come run it, but I'm like, I don't think I want to just do.
Yeah.
I want to keep, I want to be able to do everything. I don't want to just do the loans.
Exactly.
So
yeah, how do you get on? So like when we bought our Fulton Home one, the Fairway was one of them, a team on Fairway, and another company. Like, how do you get that?
they've just been there a long time.
Okay.
Yeah,
And then
they
do they come relationships with the actual agents in there or the brokers within Fulton Homes?
I think that it has to do with probably somebody that's higher up it.
Somebody knows somebody
Somebody
nowadays.
knows somebody.
Yeah.
Yeah.
You can't bring
Right.
a basket
Because-
full of bread.
Because every builder account that I worked on was because I knew somebody that was higher up
Gotcha.
that got me in there. And then there's always 2 or 3 other lenders that I was always competing against within the same, because each builder would have 2 or 3. So I was going out and meeting with all the agents all the time.
Yeah.
I was always in there, always offering, always, honestly, hard work, right? I mean, like for you guys, I mean, this was a lot of my real estate agents, the reason how they got going was they literally went and knocked on doors.
Yeah.
And they hang door knockers and knock on doors and
All that
introduce
stuff.
themselves to people.
Yeah.
People are kind of afraid to do that now. But, you know, you hear someone knocking at the door and you're like inside your house going, shh, nobody talk.
Who is it? Yeah, I've done
Right?
that before. Yeah, exactly. Now, what part, like how many, because you work a lot off of referrals, right? You have a lot of referral business and stuff.
I do.
Does your referral business come through agents, or do you actually get a decent amount through like people you've done a loan for before? Like they reach out directly to you?
A combination of both.
Is it pretty equal?
It is.
Oh, wow.
Yeah. Yep. I've got a really good base of agents. I mean, you guys, obviously. But, you know, I have some agents that I've been working with since I started 25 years. So I'm still working with those same agents. And then they introduced me to other agents.
Yeah.
Right. And I think that's one thing that's really helped me is just my agents introducing me to other agents and getting to know them. And there was a time where I had agents where well, believe it or not, I know I have at least one or two agents I've been working with for probably 10 years that I've never met in person. and it's not because I haven't offered.
Yeah.
It's because they're like, no, just keep doing what you're doing.
Yeah.
We're good. You know. Like, all right, kind of nice to meet you though someday. I'd love to meet you. You know, I kind of know what you look like from your card, but it'd be nice to meet you.
That's funny.
But really, just going back to your question, it's hard work, doing a good job, having integrity, being honest. I've built so many good relationships with my borrowers. I mean, I have buyers that they've actually become friends of mine. You know, it's like some buyers you really connect with, right? But I enjoy what I do, and sometimes it's hard, but I enjoy making those relationships. Yeah.
Which I think one of the mistakes I made with real estate was coming from construction and being a W-2 employee. You show up, you have a job, you do your job. So when I came to real estate, I think I came with the mindset of I'm ready to do a job. And it's like I just need to go find the job, but okay, as soon as that's done, it's like, let's write a contract, let's get everything through, because I felt like one of my strengths was if I had a client where it's like, okay, we're buying a house and I could we've got that rapport.
Right.
Everything flowed smoothly. I could, once we're under contract, I could crush everything through. But the thing that I think I missed was the other side of the coin, which is that's not your whole job. And it's the working hard on how do you find people rather than just waiting for someone to give you a call or walk through your door. So I just think that's interesting as far as like, I think some people say like, you just work hard, and it's like, to your point, when you're fleshing it out, it's like, no, like I was active going places. I was meeting people, and I'm sure that a lot of those were like, that's going nowhere, but where's the next one I'm going to?
Right. Yeah, and you know what? It takes time. You know, that's the reason why a lot of loan officers are getting out of the business, because they don't want to put in
realtors.
Yeah, because they don't want to put in the extra that time it takes, because it's full time. You cannot be part time. It's hard, and you know it, right? You can't. It's hard to be a part time real estate agent. It's hard to be a part time loan officer. So the ones that are not making it, being part time is it hurts you. So
that's why I just stopped.
Yeah, I think we talked about it the other podcast. You had a realization and you got married.
Yeah. Well, I think my realization was
it wasn't real estate.
It was more that construction was the thing that was picking up the most, and it was like I noticed that when I was trying to do real estate and construction at the same time, it was not helping either one of them, and they were competing with each other, and it just wasn't a healthy thing.
Yeah, because you weren't able to give 100% to one of them.
Yep. Yeah. And then I think also the identity gets confused. One, like for me, it's like what are you? Are you a realtor or are you a contractor? And then also to other people, it's like, what are you? And it's like if someone has to ask what you are, I'm like, all right, I'm already dead in the water.
Yeah.
So, but
Yeah,
Well,
I mean,
pay for- yeah.
if you look at some of the most successful real estate people, it's because they don't stop getting to know people.
Yep.
They just get to know people, and
Yep.
but they're on a different level of making connections with people. So connections is huge.
Yep.
You can meet a person, but if you don't connect with that person, it's going to stop right there.
Yeah.
Yep.
So connecting, like for me, when I have a conversation with a client, I try to connect with them so that they'll remember me. Maybe they're not going to buy a house right now, but when they're ready, they remember that I helped them,
Yeah.
that I did something more than just, have a standard conversation, on the phone.
Yeah, because you helped with my getting my father-in-law's loan, and I think he's given your card out to like a bunch of people before.
Yeah.
Like just to like, oh, refinance, oh, did this. I think you helped transition getting his brother's house, but it's just like you connected with him, and he thoroughly enjoyed it. That
Yeah,
it wasn't just like robotic. You were talking
Exactly.
to a human.
Yeah.
You know, so
And I will tell you that there's some people that are good at it, and there's some people that are not good at it. You could still probably be successful, but I don't know. I'm just a people person. I don't know why. I love people. I love the stories. I love to, tell them my stories, and they tell me their stories. You know what I mean? But I'm sincere about it.
yeah.
And there's a lot of people out there that don't enjoy that, and I do. So my husband's like one of them. He doesn't like having, deep conversations with people. He's kind of like, yeah, okay, bye.
Yeah.
I'm more like, why didn't you ask them this, and what about this, and
Yeah, I think that's also a guy and girl thing too.
Is it?
My wife is like,
I don't know.
"What'd you talk about?" Oh,
I know some guys that have the gift of gab.
I think sometimes it's in a couple, you get one of each.
yeah,
That could be, yeah.
yeah,
Yep. I'm the socialite, and he's kind of
He does good at parties though.
yeah. Yeah, he is.
All right. We're closing in on our hour mark, but I did
Okay.
want to ask, before we close this thing out, you've been in the industry for 37 years, loan officer for over 25. What is kind of your plan with the business? You're an established loan officer in the business, so it's like, is there a way to almost sell that business? Is there a way to hand it off to someone else? Is there like, all right, we're gonna close up shop one day, or what do you look at as far as the long-term goal, the end point with where you're going with this?
I'm looking to mentor a person to probably take over for me. I haven't decided 100%. I love to work. I know that sounds crazy, but there's times when I'm at home, I'm so organized. And I know people that know me will appreciate it, that they know how organized I am. There's nothing for me to do. You know what I mean? Like, I'm at home going, okay, should I repaint this room again? This room needs to be repainted again. I mean, I'm having to think up stuff.
Yeah.
Because, so for me, and I'm a person that needs to stay busy, for me, but I'd like to maybe step back just a little bit where I'm not as crazy busy. But I'm working on mentoring somebody right now that may want to fill that role for me. But I don't foresee I feel like I would still be there in a capacity where I'm still mentoring and there to help and train, and I might even do, like, our company offers training to loan officers where you can actually get paid to teach classes to LOs. They pay you.
Yeah.
So I might do something like that.
I can see that.
Yeah, I mean, I kind of feel like I don't know that it's going to be really hard for me to just make a break. But that's me.
Yeah.
Yeah.
I mean, I guess I could retire right now if I wanted to, but I'm not at that point. I still feel still feel young. I still feel energetic. I still feel like I love my clients. I know it sounds crazy, but I kind of feel like if I go, who are they going to have? You know what I mean? Like, you know, and that sounds like a little arrogant, but I don't mean it in an arrogant way. I just kind of mean like, you know, well, who will they go to? You know, I got to make sure they're taken care of, you know.
Oh, that's awesome. I love
And is
that.
the business something you can, like in real estate, you can keep your license and kind of, you know, retire but still help sell family, friends, and stuff like that? Is that
Absolutely.
Can you kind of do that?
I can do that.
Go 1099 like you mentioned
Yeah,
earlier?
I can go 1099. I can still get paid off of any of my clients that, like my
Referrals,
your referral, like whoever I end up turning like all my business over to, they will have to pay me per loan because they're my loans. So it'll just be a little extra money coming here and there.
Exactly.
But
Nice.
so that's kind of my end game. But you know, I mean, my dad worked till he was 80.
Yeah.
So I don't know. I'm a little bit of a workaholic. I've always been. I mean, I run circles around like guys your age. I'm sorry to tell you. So I mean, even like, you know, I'm kind of like, come on, you know, let's get it done. I could get in. What I'd love to do, I should have done, is be someone that organizes. Like, I am so good at organizing. And like, if you came to my house, there's not a cupboard that you could open up that's not organized. I have all my...
Are they labeled?
They are. And then I have all my pictures from the time I was young in photo albums.
Chronologically.
Yes.
Oh,
Yeah. You can open, they're all dated. I have a whole closet with all my photo albums.
There's another source of income. If you're that, you should just take pictures and
Right?
like put it on
Yeah.
Pinterest. And then whatever you bought, like I've just,
Right.
whatever you bought,
Yeah.
you tag it, and then like if other people buy it, you get money off of it for just taking pictures of your house.
Yeah.
You get paid to be as anal as you are.
And you know what? I love searching out organization stuff. The Container Store.
That's a deadly for anybody.
That's my.
I enjoy the Container Store.
That's the place to go.
Oh man.
It's like, forget about like, you know, Nordstrom's. I'm like, I want to go to the Container Store. So, but it's a gift. It is.
Yeah.
Not a lot of my sons are not organized like I am, but they appreciate my organization.
I
And-
wish I could be like that.
Yeah, I search stuff out. I'll go, is there something to organize your bed sheets? And there is.
Is there really?
Yes.
Have you figured out how to fold a fitted sheet?
No, but you don't have to because I do know how to fold one, but but you don't have to because they make these bands. They're rubber bands, and it says, you know, like twin, full, king, and so you can basically just kind of fold them up like you can. And you just put the bands around them.
Oh, I
And
like
you know
that
what kind of
idea.
sheet you have in your closet.
Because it's labeled.
Heidi,
like
this is my
labeled.
favorite part of the whole episode right now.
Right?
Yeah. Well, when you got multiple size beds, if you
Yes.
got something that tells you you don't got to take the sheet out and be like, is this for the old queen that I used to
Yes,
have? Or is this,
right.
you know, I like it.
I'm telling you. I should just take a picture of my closet. Do you guys want your closet to look like this?
Yes.
Let me tell you how I did it. So,
That is awesome. All right, as we close it out, we've got a couple quick questions for you.
okay.
What's the most impactful thing you've learned?
In this podcast or in life?
You can take it however you want.
From right this
Right
second.
in a second. Oh gosh, I would say that probably the thing that I've learned is having integrity and being honest.
That's a good quality
Huge,
to have.
huge.
What's your favorite movie?
Gone with the Wind.
Ooh.
Have you ever seen it?
Yeah.
You have.
But
You
you're
haven't?
you're the fastest person that's ever answered that, answered that question before.
Probably.
Everybody either's like, well, comedy.
I can't answer.
I
There's
don't know.
3 movies.
Well,
Because
you know
you-
what? Yeah, because I watched it all the time with my mom, and so that meant a lot to me.
Yeah.
And it was her favorite, and of course it was back in the day when, there wasn't you couldn't just show it on TV. You had to wait for it to come out.
Mm-hmm.
So we would wait for it, and then it was like something you had to watch over 3 nights.
Yeah, because that's a long movie, isn't
It's
it?
a very long movie, yeah. But it was really good, but yeah,
You should watch it now.
you should watch it.
I hardly have time to watch anything, so.
Frankly, you should watch it.
Yeah.
Then you'll get why I
You
just
need to
said
get one of those
frankly.
magnet things, and then you just put your phone on there, because you drive a lot.
Yeah.
And just watch it while you're driving.
Yeah. It was a cool movie for its time.
Yeah.
It was,
And I don't like old movies.
yeah.
Your first character strength that comes to mind.
Organization.
Agreed.
An item that you would always spend extra money on.
Shoes. Gotta have good shoes.
All right.
That's what my mom always said. Don't always spend money on good shoes.
Comfy shoes are stylish.
No. Good shoes that don't kill your feet.
Yeah.
And I will tell you, let me just tell you, I have really good feet.
Ooh.
Oh, that's kind of weird. Anyway, but I do because
Feet finder.
yeah, right? My nail there's people that pay for you to post your feet.
Yeah.
Yep. That's
Yeah, that's
And
the feet finder.
my nail girl's like, "Oh, Heidi, you have really nice toes. Like you should go in there."
You should
So
be-
I
you
came.
need-
Well, I went home and I told my husband. I said I can make money with my toes on this thing, and he's like, "You are not posting your feet on anything." I'm like, "All right."
You don't want to know what they do with those photos of your feet, but
Yeah.
Yeah, you don't have to know.
But because I've always worn good shoes that
Mm-hmm.
have the support that are made better,
Mm-hmm.
I have no feet problem at all. And all my friends that are my age, they're getting feet surgery left and right.
Oh, that's nice. I used to have heel
so you know.
I used to have heel problems back in the day, when in high school. But I think it's because I was like growing. But I hate when my feet hurt. It's the worst.
Oh, it's the worst.
That and tooth pain.
oh yeah.
Your teeth pain. Yeah.
Yeah.
Last one.
Where can people follow what you're doing or get a hold of you?
My website, www.theferraroteam.com.
All right. And then after she's done doing mortgages, she might have a profile up on the
Yes.
Feet Finder
Yeah.
website. So
Yes.
we'll pay attention to what comes next.
Right? How to organize your shoe closet. Follow my feet.
Yeah. You better be careful. You might have ran into
Right?
something.
I
Yeah.
know. I know.
Wish you would have just started out 25 years ago.
Yeah. Right? I know.
Heidi,
You guys want to see my feet now, don't you?
no, I'm good. I'm good.
All right, fine. You'll see him one day when I'm wearing
I was saying,
sandals.
well, now anytime I see you in person, I'm always going to look to see if you have sandals. Just
I
in
know.
glance.
Right? I was not lying. I was at a gas station and some guy walks up and goes, "Ma'am, I know you're going to think I'm weird,
Yes.
but you have really nice feet."
You're like, thank you.
I'm
Yes,
like,
I do think you're
yes,
weird.
I did. I'm like, "Thank you. Where's my keys? I got to get in my car."
Oh my gosh.
So anyway.
Heidi, it's been a blast. Thanks for coming on the show.
You're welcome. I enjoyed it very much. Thank you for having me.
Absolutely.
I'd like to do it again. We can talk about anything.
The next crisis you're on.
Yes. Right. Okay.
All right. Thank you, everybody, for listening. And until next time,
I hope your hammer stays accurate.
your Wi-Fi fast.
Your work blessed.
See you, everybody.
Sometimes he used to just read it by himself.